the BRICS nations, led by Russia and China, it would be very interesting to see a stadium in China just filled with gold. Here's our gold. What do you have? And I think that is, if that were to happen, you would see a complete implosion in the value of the dollar. The dollar would be sold everywhere. And when I say the dollar, I'm including treasuries. So the Federal Reserve setting interest rates, they're in the process now, but under that circumstance, they would completely lose control of the yield curve. You'd see interest rates go to 10, 20, maybe 30, 50% to try to defend the dollar. And, now we're talking Banana Republic stuff.
In today's news recap, silver eyes $33.23 breakout as triangle pattern signals a volatile move. Silver is trading sideways at $32.35 in a tightening symmetrical triangle that has everyone waiting for a breakout. Gold had its worst week since November as risk appetite surged following a temporary U.S.-China trade truce. The U.S. dollar index fell 0.3% on Monday, making dollar-denominated precious metals more attractive to international buyers. Sentiment changed after Moody's downgraded the U.S. sovereign credit rating by one notch, citing rising debt risks. That downgrade, combined with a return to risk-off trading, has added some shine back to gold, said Tim Waterer, chief market analyst at KCM Trade. But the real wild card is Donald Trump's tariff threats. Treasury Secretary Scott Bessent confirmed the administration will impose duties on countries that don't engage in good faith trade negotiations. That has rekindled fears of another round of global uncertainty and a potential tailwind for safe haven assets like gold and silver. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Gold and silver can never be made worthless. And the reason being, gold is accepted anywhere and everywhere around the world. The West has tried since August 15th, 1971 to demonetize gold. And the peak of their success would have been the year 2000 when gold hit $252 an ounce. Here we are now at $3,200. You were looking at $35 an ounce in 1971, and we just recently hit $3,500. So that is 100-fold increase. And another way to say that is the dollar lost 99% of its value since 1971. So to answer your question, I don't think there's any way that gold and silver could become worthless. And the dollar itself is the reason behind the BRICS formation in the first place. And then, of course, what really cemented psychologically to the BRICS and proved to them that they were correct to try to exit and move away from the dollar is when Russia had the $300 billion in reserves sequestered, absconded with, whatever you want to call it. What was it? It was October of 2023. If the United States can steal $300 billion from Russia, they can steal whatever they want from anyone they want. I think his number was something like $3,500. So we're in that neighborhood right now. You're watching the man-made reset. Just again, look at the BRICS versus the West. So there's your divide. There will be a reset from that. But as Jim talked about, being a man-made reset, it's not going to work because whatever the reset of the dollar is, it's still going to be a fiat. I mean, even if they push this into CBDCs, what is the backing to that currency? There is no backing. Whereas, the BRICS is going to back their currency somewhere 20 to 40% ratio. We don't know what that number is going to be. But even at 20%, you'd have to have big numbers. I mean, you probably have to have 15, 20,000 gold just with a 20% backing. The second reset, and there could be a third reset, is going to be more Mother Nature. It'll look more like Mother Nature, like a real reset, something that is done by free and unfettered markets, as opposed to a new currency being jammed down our throats, which is the plan in the man-made reset. I mean, I could show you on the back of a napkin, simple, and this would have been 6, 7, 8 years ago, that they had already accumulated 25,000 metric tons. I think the number is now at least 35,000 metric tons. And
You're talking about China.
I'm talking about China. If I said the U.S., I was wrong. The U.S., we say that we have 8,300 tons. It's not been audited since the 1950s. How much do we really have? My guess is we probably have a couple thousand tons left. And even if there is gold in Fort Knox, West Point, etc., a lot of that is already encumbered. It's been leased out. The paper rights or the paper ownership to a lot of the gold, I think, has already been moved, over the years to other entities.
In today's news recap, silver price hits $33.57. Three levels traders are watching as breakout momentum builds. Silver is trading at $33.57, up on a softer U.S. dollar and rising geopolitical tensions. The greenback dropped 0.6% against major currencies, making dollar-denominated metals more attractive to overseas buyers. This comes as U.S. equities are falling and Treasury yields are rising as investors worry about the growing U.S. deficit and President Trump's proposed tax plan. Markets are on edge. We're paused between the high and recent low, waiting for more clarity on trade and tariffs, said RJO Futures strategist Daniel Pavlonis. A recent Reuters poll showed a fragile U.S. economic outlook despite the temporary truce in the U.S.-China trade war. Global tensions are high. CNN reported that Israel may be preparing to strike Iran's nuclear facilities even as diplomatic channels are open. This is continuing to drive demand for safe haven assets like silver and gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
I think the fix will be a complete collapse of the financial system. The reason being, I mean, look what happened this past Friday. Moody's downgraded U.S. debt. I mean, the U.S. debt should not even be close to AAA rated. I mean, all you have to do is look at the numbers. You look at the amount of interest alone that has to be spent. We're looking now at roughly 5% of GDP is the interest alone, and we're having to borrow that to make the payments. So, the numbers just don't work as far as from a financial standpoint. The Treasuries are the foundation to the financial system, and Treasuries are quicksand. Treasuries they're dollar based. And they're issued by a bankrupt or insolvent entity. So the math or the problem is that the financial system has been held up by debt and piling more and more debt on the system, and that's what's inflated assets is the amount of new debt coming into the system. There's no way that the world is going to step up and bring 9 or 10 trillion into an asset that the world is already moving away from. It's going to be the Fed. The Fed is going to buy Treasury debt, and I mean if I forget when it was. I think 2019 when the Fed and Treasury were merged, and the Fed was always separate from the Treasury, and it was always completely taboo for the Fed to monetize, because I mean we know what happens with monetization. The currency ultimately collapses. It collapses in purchasing power. It ultimately, the fiat goes to its intrinsic value, which is zero. So when they merged the Fed and merged the Treasury together, I mean, that's your right pocket and your left pocket, and the right pocket's borrowing and the left pocket is just printing money to to buy those bonds. And I mean, if you've got the same entity buying their own wares, then what are those wares worth? And the answer is zero. And that is the foundation to the whole system. How do they do an audit? I mean, if they do an audit, and how do they come out with the real numbers? Because I mean, it's clear, and we know that so much gold had been leased. I mean, even going into the year 2000, 2001, back when Canada sold their gold, Britain sold, 40% of their gold. You had mining companies all over the world forward leasing, and then, of course, the price started to rise, and those had to be covered with billions of dollars of losses. I think it's pretty plain to see that there was gold out of Fort Knox, West Point, etc., that had been leased out. So I don't know. I don't think an audit is going to be done, and if it is done, we're not going to get the real story anyway.
What do you think of Bill's take? Is he spot on? Do you agree with him? Post in the comments section down below your honest opinion, and share with the stackers if you have an exit plan to sell your gold and silver, or if, on the contrary, you won't sell your stack no matter what. Subscribe if you have not yet done so, and check this video right here because it's a perfect fit for you. I'll see you on the other side.